Welcome back to the Pro Ticker Podcast, where we love to take a deep dive into the most interesting stories in finance.
That's right. We love to get the shovels out and dig around. And today we're talking Wells Fargo.
Yeah, so Wells Fargo, obviously a giant in the banking world, but they've had a rough few years
Yeah, 6 years now.
with that asset cap really putting a damper on their growth.
Right. It all goes back to that scandal with the fake accounts.
Oh, yeah, that's right. I'd almost forgotten about that.
Well, the Fed hasn't. And they slapped Wells Fargo with this asset cap, essentially limiting how much they can grow.
So while their competitors like Bank of America and JP Morgan are out there raking it in,
Wells Fargo's been stuck.
kind of like, well, I was going to say, like watching a car race from the sidelines.
Yeah. We're like trying to run a marathon with one leg tied behind your back.
Okay, I get the picture. So what's changed? Why are we even talking about Wells Fargo as a comeback story?
Because there are signs that this could be their turning point. For one, they recently sent a big report to the Federal Reserve.
A report? What's so exciting about a report?
This wasn't just any report. It was like their thesis on how they've completely overhauled their risk and control systems.
So basically they're saying, trust us, we've changed.
Well, they're putting their money where their mouth is. They've spent a ton of time and resources to revamp their internal controls.
And what's the market saying about all this?
Investors seem to like what they see. Their stock jumped 5% when the news of the report came out.
Okay, so there's some buzz. But is this real or just hype? Are the analysts buying it?
Some big names are cautiously optimistic. John Pancari over at Evercore ISI and Jason Goldberg from Barclays. They both think this could be a game changer for Wells Fargo.
Especially if the Fed lifts that asset cap.
Exactly. And some are saying that could happen as early as 2025.
Okay, so let's say that happens. Best case scenario, the asset cap disappears. What makes Wells Fargo such a promising investment? Why not bet on one of the other banks that haven't been in the doghouse?
Because Wells Fargo has some serious potential just waiting to be unleashed. First of all, there's a sense that the regulatory scrutiny might be easing up.
Like they've served their time and the feds are ready to give them another chance.
Something like that. Pancari called it abating regulatory headwinds, meaning Wells Fargo can finally shift its focus from playing defense
To going on offense.
Yeah, exactly.
I like it. So less red tape, more innovation, more growth.
Precisely. And that brings us to the second point. All those pent-up growth opportunities.
Because they've been hamstrung for so long.
Right. Imagine having to put all your big plans on hold because you're operating with one hand tied behind your back.
And I can't even imagine. It's like they've been in a holding pattern while the competition's been out there gobbling up market share.
Right. But lifting the asset cap could change all that. Suddenly they've got room to maneuver, to expand aggressively, to launch new ventures. The sky's the limit.
Okay, I'm getting fired up just thinking about it. So we've got easing regulations and tons of pent-up potential. What's the third thing?
The third thing is Wells Fargo's underlying financial stability.
You mean despite all the drama, they're actually still in decent shape?
Better than decent. Their credit quality has remained remarkably strong throughout this whole ordeal.
That's surprising. I guess I figured all the negative press would take a bigger toll.
It speaks to the strength of their core business. They've been through the ringer and come out the other side with their fundamentals intact.
Okay, so let's talk numbers. If the asset cap does get lifted, what kind of financial impact are we talking about?
Now, it gets interesting. We're not just talking about removing a constraint here. We're talking about unlocking efficiency.
Inefficiency, how so?
Well, for starters, CEO Charles Scharf has said they've had to hire an extra 10,000 employees.
10,000.
10,000. And spend an additional $2.5 billion a year.
Wow.
Just to comply with the various regulatory orders, including the asset cap.
Just to tread water, basically.
Exactly. All that just to maintain their current level of business. Imagine what they could do if they could redirect those resources towards growth and innovation.
So we're talking potentially massive cost savings.
Massive. And that translates to higher earnings. Some analysts are estimating they could reach $6 per share.
$6 a share. Seriously?
That's what some are saying, partly due to those cost reductions alone.
Now that's what I call a comeback story. But let's be realistic for a second. It's not all going to be sunshine and roses. What are the potential pitfalls here? What could derail this whole thing?
Right. You know, it's not going to be easy street from here on out. There's still a big question mark hanging over this whole thing.
You mean the asset cap?
Exactly. Even if they've done everything right, there's no guarantee the Fed will actually lift it in 2025.
So they're still at the mercy of the regulators.
To some extent, yeah. And even if the Fed gives them the green light, it's not like they can just flip a switch and suddenly become a well-oiled machine.
Right. They've got to undo years of being in the penalty box.
Exactly. It takes time to change the culture of an organization that big, to streamline processes, to get everyone on board with a new way of doing things.
And let's not forget, they're still operating in a pretty tough economic climate.
Yeah, right. Interest rates are up. Inflation's still a concern. There's talk of a recession.
Not exactly smooth sailing for anyone.
Nope. And on top of all that, Wells Fargo still has that trust issue to deal with.
Yeah. How do you convince people that you've really changed after such a public mess?
That's $1 million question. They've got a long way to go to rebuild their reputation. And it's not just about saying the right things, it's about proving they've actually learned from their mistakes.
So are there any signs they haven't quite cleaned up their act?
Well, they're still operating under a bunch of consent decrees, including a recent one that flagged problems with their anti-money laundering efforts.
Oops.
Yeah, not exactly a vote of confidence.
So it's like they're trying to bake a cake after dropping the first one on the floor. You might have cleaned it up, but people are still going to be a little hesitant to take a bite.
Exactly. And speaking of things that might make people hesitant, let's talk about their efficiency ratio.
Efficiency ratio. Sounds boring, but I'm sure it's important.
It is. It's basically a measure of how much they spend to generate every dollar of revenue. And right now, Wells Fargo is lagging behind its peers.
Oh, okay. So what are we talking numbers-wise?
Well, in the first half of this year, their efficiency ratio was around 66%. To put that in perspective, JP Morgan Chase is closer to 56%.
10% doesn't sound like a huge difference, but I'm guessing at their scale, it's a pretty big deal.
You bet. That gap represents billions of dollars. Now, to be fair, some of that inefficiency is due to those extra compliance costs we talked about.
Right, all those people they had to hire just to deal with the regulatory fallout.
Exactly. But it's not the whole story. They've also got some work to do on their internal structure and their technology.
Technology, what do you mean?
Well, you know how everyone's talking about fintech these days?
Yeah, all the cool new apps and stuff?
Right. Well, Wells Fargo's got some catching up to do in that department. They've got all these legacy systems that are slow and clunky and expensive to maintain.
So they're basically trying to run a marathon with old shoes.
Something like that. It's holding them back.
Okay, so we've got the efficiency gap,
Yeah.
the trust issue, the tech challenges. It sounds like Wells Fargo has its work cut out for it. But let's play devil's advocate for a second.
Yeah.
What's the bull case? Why are some investors still so optimistic about their future?
Because despite all the challenges, there's still a lot to like about Wells Fargo. First of all, many analysts believe their stock is undervalued.
Meaning it's a bargain.
Essentially, they're trading for less than they're actually worth,
A sip.
especially if they can overcome these obstacles and capitalize on their strengths.
Like what?
Well, for one, they've got a massive wealth management division.
People are always going to need financial advice.
Exactly.
Right.
That's a huge potential growth area, and Wells Fargo is already a major player. With the right strategy, they could attract even more clients and really expand that side of their business.
Okay, so wealth management's a bright spot. What about their core banking business?
Don't forget about all those pent-up growth opportunities. Analyst Jason Goldberg thinks that without the asset cap, Wells Fargo could get really aggressive about opening new branches.
Really? I thought branches were a dying breed.
Not necessarily. They still hold value, especially for certain demographics and for certain banking needs. Plus, having a physical presence in a community can be a powerful way to build trust.
Interesting. So it's about meeting customers where they are, whether that's online or in person.
Exactly. And Wells Fargo's got the resources to do both.
Okay, so we've got growth potential in wealth management, a renewed focus on branches, and of course, if they can get that efficiency ratio down, they'll free up even more resources to invest in growth.
Exactly. They're also investing in technology, particularly in areas like AI and data analytics.
Okay, so they're not completely ignoring the fintech revolution.
No, they're trying to embrace it. They're using AI to personalize customer experiences, detect fraud, automate tasks, all that good stuff.
Sounds like they're moving in the right direction. But let's zoom out for a second. How does Wells Fargo's potential comeback fit into the bigger picture of the financial industry?
That's a great question. The whole banking sector is in a state of flux right now. You've got rising interest rates, concerns about a recession, and of course the rise of fintech.
So it's not just about Wells Fargo's internal challenges. They're also navigating these external forces.
Exactly. It's a perfect storm. And that's what makes their potential comeback all the more intriguing. Can they not only overcome their past missteps, but also rise to meet these new challenges?
It's a high-stakes game, for sure.
Hands out. But if they play their cards right, they could emerge as a leader in this new era of banking.
Okay, so we've covered a lot of ground here. Asset cap challenges, growth opportunities. What's the bottom line? What are the key takeaways for our listeners?
I think the main takeaway is that Wells Fargo is at a crossroads. They've made some real progress in addressing their past issues.
Yeah, they've definitely taken some important steps.
But they still face a lot of challenges. Their success depends on a lot of factors, some within their control, some outside of it.
So it's a complicated picture.
It is. And
Yeah.
that's what makes it so interesting to watch.
It really is a nail-biter. Will they or won't they? Can they really pull it off?
It's going to be fun to watch, that's for sure. A lot of risk, but a lot of potential reward, too.
Yeah, if they can get their ducks in a row, this could be huge. I'm definitely adding Wells Fargo to my watch list after this deep dive.
Me too. It all comes down to execution. Can they actually deliver on all this promise?
That's the question, isn't it? And that's what makes these conversations so interesting. You can read all the headlines you want, but until you really dig into the detail...
Right, you don't really get the full picture.
Exactly.
Yeah.
So for our listeners who are now glued to their seats, wondering what the future holds for Wells Fargo, what's the one thing you'd want them to remember from our deep dive today?
I'd say don't get too caught up in the asset cap drama.
Because there's more to the story.
Exactly. It's a big deal, don't get me wrong. But it's not the only thing that matters. Look at their internal challenges, too.
Like that efficiency ratio.
Yeah, and their efforts to rebuild trust. Those things are going to be just as important in the long run.
It's like a giant game of chess.
Yeah.
Gotta be thinking several moves ahead.
Exactly. And right now, nobody knows how it's all going to play out.
The suspense is killing me,
Yeah.
but in a good way. This has been a fascinating deep dive. I've learned a ton. What about you?
Same here. Always something new to discover. That's why we do what we do.
Absolutely. So to our listeners out there, keep an eye on Wells Fargo. It's going to go wild ride.
Yeah.
And until next time, keep those brains engaged and those portfolios diversified.